Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. So today we're diving into NexPoint Real Estate Finance, and let me tell you, this report has a little twist of financial maneuvering that's quite interesting. So NexPoint Real Estate Finance, also known as DREF, is the company we're looking at today. And they've just filed a report. Here's the most exciting part. They've entered into a new financial agreement that significantly changes their borrowing power. Let's get straight to the heart of it. NexPoint's subsidiary NUF OP REIT Sub LLC has entered into a second amendment and restatement of a promissory note. This basically means they've updated and renewed a loan agreement with NexPoint SFR Operating Partnership LP. Now, this might sound a bit dry, but stick with me because what's happening here is pretty significant. The original loan, which was documented back in January, had a maximum amount of $5 million, but with this new amendment, they've boosted that ceiling to a whopping $15 million. That's a huge jump, and it shows a big change in how they're financing their operations. And not only did they increase how much they could borrow, they also immediately took out an extra $5 million. As of August 25th, 2025, they had $10 million outstanding under this note. Now, what's really interesting is the interest rate on this loan. It's a high 15% per year, and it's payable in kind, which means instead of cash, they might pay with more of their assets or stock. This is a very aggressive interest rate, folks, and it signals that this loan is likely for a specific high growth or perhaps higher risk venture within their operations. The note is set to mature on July 10, 2026, so they've got about a year to manage this debt, so keys. Now, thinking about NexPoint Real Estate Finance in general, a company like this typically invests in real estate and aims to generate income from those investments by increasing their borrowing capacity to $15 million, especially at a steep 15% interest rate, suggests a move to acquire more properties or perhaps fund a new development project. Speed and access to capital are key in real estate, so this increased loan facility could be a strategic move to capitalize on market opportunities. It's important to remember that this report is a current report, meaning it's about a significant event that just happened, not a full quarterly update, but these kinds of filings often give us a peek behind the curtain. We haven't seen any specific financial tables showing revenue or profit changes just yet in this particular filing, but this news about the increased loan is a major indicator of their financial activities. When we look at the overall picture, a 15% interest rate is quite high. If they can manage this debt and the investments it funds successfully, that $10 million loan could lead to significant returns. However, if the underlying assets or projects don't perform as expected, this high interest could become a real burden. This is the kind of bold move that can either propel a company forward or lead to significant financial strain. It all depends on execution. So what does this all mean for NexPoint Real Estate Finance? Well, it shows they are actively pursuing growth and are willing to take on debt at a premium to achieve it. It's a strategy that requires careful planning and a clear vision for how these extra funds will be deployed to generate a return that outpaces that 15% interest. A key risk here is the short-term nature of the loan and its high cost. If the company can't renegotiate or repay it by July of next year, the implications could be serious, especially if interest rates in the broader market haven't improved. Furthermore, the payable in kind aspect means we need to watch how they might dilute existing shareholders or impact their asset base to cover this interest. Ultimately, this filing signals a period of potentially aggressive expansion for NexPoint Real Estate Finance. The coming months will be crucial to see how this increased debt facility translates into actual business growth and profitability. Does this move show strong leadership and foresight, or is it a high-stakes gamble? Only time and future filings will tell. Alright, that's our quick decode of NexPoint's latest move. What do you think about this big loan and that hefty interest rate? Share your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more insights like this. Oh, and don't forget to join our Discord community, linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next decode.